Today, I hope to share some things that will prove when you absolutely should mine at a loss and also when you shouldn't. What's up, Force? This is a big topic that everybody's talking about, especially right now during the bear market. It's really one of the major questions. The question today is, should you mine at a loss? The reasons for and against that. A lot of people think you shouldn't. If you're mining at a loss, why not just DCA and buy into the coin directly? There are some valid reasons for that, but I'm going to show you there's also some valid reasons for why you should be mining in dollar terms if it's a loss. Everybody's familiar with the term DCA, dollar cost averaging. These are weekly candles with a 12-month average price. If we look at the individual dot plots, you'll see the monthly price points. The idea of DCAing is that you buy some, and over time, you'll have a fat stack of coins that you got at a nice, even price. But let's think of this in a different light. Have you ever considered that you've been DCAing at a loss? I doubt it. You don't hear many people saying, why are you dollar cost averaging at a loss? But let's look at the chart again. If this is the average price on a month-to-month basis, then what's to say when the price runs up high, you weren't buying in at a loss? When the average price is down here in 2018 at $4,000, were you buying in at a loss when you were buying it at $14,000? As we go forward into 2019, would you say that you were buying it at a profit? You could have been buying at $3,700, but the average price was more around $7,400. Of course, after COVID, they tried to reach for the moon, but the average price was still lingering way below where people were buying at. So all during the bull run, were people dollar cost averaging in at a loss? What is fair price? That's up for people to decide. But the truth is, you never really consider that you might be dollar costing in at a loss or dollar costing in at a profit. You just say you're dollar costing in. What if instead of dollar cost averaging in, you only decided to buy when the dollar term cost was below the average? You'd accumulate coins for a half year here. Let's call it a half year there. It's break even there. There'd be no accumulation during the bull run. You'd be accumulating all in 2022. So all in all, you'd have 2.5 years of accumulation. Is that really what you're after? It's never as easy as buy low, sell high. No one knows what market price is going to do, not even the best traders. In fact, the best traders know that they won't know the price. What they can count on is statistics. And statistically, they know that price is going to go up. All right, so the big question, should you be mining at a loss? Let's draw a line across the board that represents electric cost. Somewhere that might represent where mining has been profitable and where it hasn't. That looks good. It doesn't need to be perfect. It just needs to represent the concept we're talking about. That if you understand the DCA, dollar cost averaging concept, then it should be easy to understand about mining at a loss. We're going to call it electric cost averaging. DCA, dollar cost averaging, ECA, electric cost averaging. Starting back from mid-2017, you're making profits above your electric. At times, you might dip below in 2019 when barely there was any profits at all or negative profits. There might have been some negativity during 2020 until the end. I know it wasn't that much, but it's a visual representative of the concept. If you were here during the end of 2020 and 2021, you know it was bam, it was epic for mining. We're way above our electric cost line there. It's just dollar profits after 2022. And into 2023, we became so negative in GPU mining, especially after the ETH merge. And we spent so many months in a negative situation, only now being able to break out. Understand that what we're talking about here is dollars. And in the end of the day, is dollars what you're really after? I know for some people that's the case, but it's not for everybody. At the end of the day, just like dollar cost averaging in, they're looking to accumulate the coins. And when you're thinking in terms of daily dollars, daily profits, it's really easy to get distracted from the end goal, accumulating coins. Since it's always fun to speculate, let's say that this is going to be our next run up. If you're a believer in crypto, then you can believe that one day we're going to go up higher, and you want to have the coins to make sure that when we get there, your bag is full and we're ready to roll. And the whole point of DCAing in is to think that in the future, we might go higher. You can't just rely on your intuition to buy only at the right times. That's what the whole point of dollar cost averaging in is. It's to get the median price, keep accumulating coins until the next run up. So why should that not also apply to electric cost averaging in? Yeah, there's going to be times where dollar profits are below the market price of the coins we're mining. I know we live in a dollar world, but it's important to just keep focus of what we're really trying to do. We mine for the tokens. If loading our bags and accumulating coins is the goal, does it really make sense that you only turn your rigs on when the USD profit price is above your electric price? I really don't think so, because otherwise you're only mining half the time and you're missing out on a lot of accumulation time you could be getting coins for the run up into the bull market. So yeah, with my miners, I'm very secure in knowing that I'm not going to be selling for a while. I want to accumulate coins. And just like there's so many people out there DCAing in to Bitcoin and other coins, I'm going to be ECAing in. Now, this strategy isn't for everybody. There are definitely times where you should not mine at a loss. If you are constantly selling your mined coins to cover electricity costs, then yeah, there's no reason to pay more for electricity. But with markets being very volatile right now, it's just good practice to think more in terms of tokens and coins than it is in dollar terms. I want to thank everyone that's commented on my videos, that's decided to subscribe and be a part of it. The support from everybody has just been unbelievable, and I just want you to know I just really appreciate it so much. With this channel, the idea is to really bring the goods, and I hope that's exactly what I'm going to do for you here. Be good, be safe, and keep hashing.